I've met some really fascinating people here already. I haven't met all of you. I'm looking forward to meeting you and understanding what you do. And maybe there's a connection. Maybe I can refer you to somebody. Maybe if you find out what I'm involved in, you can refer me a person. That's really what it's about. Business development. I do a lot of business development, marketing, capital formation for small cap companies. I've had a history doing that with emerging companies. Well, it's called Reg D, pre-IPO stage companies that see a big size, see a growing market, and there's a place they see themselves or their company or their idea positioned in that market. What they need to grow in that market is capital. And so I got caught the bug in the computer software industry in the mid-'80s with an entrepreneurial firm called Data One Software. I was VP marketing and owned a small piece of the company. It's the first time I'd owned a part of a company. And we ended up getting merged out of business, but I ended up setting up new channel distribution for our software product, which meant going from 0 to about 300 dealers who were distributors who were buying our product, software product, at 60% off and reselling, 700 dealers, if you will, who were buying the product at 40% off, and they were Radio Shacks and computer lands and business lands and those kind of places. And then we were advertising and selling retail as well. So I would say that, for myself over the last 25 years, I've looked for opportunities and looked for help other people achieve their goals, to help them recognize opportunities, to recognize what resources they have, and work with them to help them achieve their goals. I worked in technology and entertainment business for a number of years with entertainment clients, satellite television, advertising, and through the 90s when things were just roaring, it seemed like. And the dot-com kind of changed things. The 9/11 changed the climate. And I spent probably the last 10 years more in public finance, really looking to fund affordable housing projects and with debt financing. In the 80s, equity was rolling, so that's where I was at. In the 80s, technology was involved. That's where I was at. In the 90s, the economy was growing, so I was in business ventures to try to capture a part of that. We basically connect dots. Okay, but the principal vehicle just set up a LLC. I've been consulting and accepting clients for years, doing finance, doing business development, doing strategic planning, doing marketing, and whatever needs to be done. But I'm kind of returned to my roots now, which is capital formation for small cap companies. I had a couple of people knowing that I was coming here and wanted me to pitch their deals. I said, no, I'm not going to do that. I'm pitching SS Ventures Group, LLC. However, the ideal client, since I asked that question, is someone who is, as the current client I have, that's an apparel company. They have $5 million of production financing. They don't have a lot of skin in the game. They've leveraged their management team and $5 million production financing on a contingency that they're able to raise another $5,000 of debt and equity. So $2.5 million of that is for you, Reed. Maybe we can do something with this, huh? Okay, so $2.5 million from a very well-placed financial firm that's willing to put up $2.5 million, but now you got to get this other $2.5 million. So they asked me to say, well, if you can find anybody, I said, well, okay, but I'm not pitching this deal. They said, why not? Well, you guys got 35% of the business. You have no money in it. You're taking 35%. You're asking investors who have skin in the game, who are at risk, to invest that much money, and your idea, which is not a unique idea, but you're saying your management, which is a unique management DNA footprint, is worth 35%. But you've got a good concept, you've got a great market opportunity, you've got a great management team, you've assembled some financing, so maybe no one's going to give you 35%, but on the strength of the idea and your management, it's probably worth 10 to 15%, maybe. And you'll have to cut me more than a point and a half. If I bring through $2.5 million, Reed, you'll give me more than that, right? So that's kind of the world I'm in. And the world of ideas, the world of opportunity, and boundless optimism about life and what we can do. And I see that on everyone's face. I've seen it, I've heard it in every conversation. And so I applaud all of you. And I would say if you have any questions, I'll be open for any questions. Yes.
In the entertainment field, where do you see it going? I know a lot of things have changed. The sets, not the other.
Entertainment, what do I see? Almost on a decade basis, because to get ahead of the curve. And a lot of times in business, it's difficult to get out in front of the curve, if you will. You know, if you get out too soon and you're undercapitalized, you are a early innovator, it's called. But unless you have sufficient capital, you can't stay out there, because a company with superior capital will come in, look at your idea, and say, that's a great idea. We can build a better mousetrap, and then they'll overtake you in the marketplace. So you have to, I think, to answer your question, I think technology-driven entertainment ventures that are driven by digital media, social media, and emerging technologies are what's hot. The second thing is who the marketplace is. And ready for me to go? I'll close out.
We're going to bring you back later.
All right. I mean, just give me 30 seconds, 60 seconds, 2 minutes to answer this question. But the bottom line is, if you're in the music industry, you know where the trends are going, where they've been. Stay on top of where the market is going. Look at where the market opportunity is in terms of demographics. You know, entertainment, a lot of it's young, and I think that's your best advice. Follow the trend and change as the market changes.